But as promised, let's get straight to Amit Dixit, the analyst at ICICI Securities, who joins us on the line to discuss expectations from the steel sector in Q2. Well, Amit, good morning. Thanks so much for joining in. Well, the key factor for the last quarter is going to be coking coal cost. I was just looking through various reports, and they're indicating 40 to around $60 per ton cooling off on coking coal cost. How much are you factoring in?
Yeah, hi, good morning, Nigel. So we are factoring in $40 to $50 per ton lower cost. Okay.
And at current prices, how does it, compare with the average that you're considering for the past quarter? Because the problem is towards the end of September, beginning of October, suddenly coking coal costs have spiked up yet again.
Yeah, so that's a very relevant point. What we have seen that coking coal prices, if you look at last, let us say 1 month, they are up almost 19 to 20%, and the move is still on. So clearly, that will have a bearing on the spreads. However, the steel prices have also moved up. In fact, people have taken hikes towards the beginning of October, and our channel checks indicate that there could be more hikes also if the coking coal prices remain this robust. On the spreads front, well, if coking coal prices remain there where they are, and steel prices also, remain where they are, definitely there would be an erosion in the spreads, spot spreads, that is, to the extent of 1,000 to 1,500 rupees per ton in this quarter. But having said that, we will have to see how the quarter pans out. Still, we are in the beginning.
Okay, so for the past quarter, though, where are you working with a positive surprise? Sale is on a very, very low base, so those numbers could look, relatively better. But for you, what are you factoring in terms of a positive surprise? And where do you see, negative surprise? Tata Steel Europe is going to deliver a loss. But which are the two stocks that you'll be looking on the positive and the negative side?
Yeah, so, sale, as I said, it is definitely going to show better improvement in EBITDA per ton, mainly because of the fact that the other companies, their realizations increased in Q1 on QOQ basis because of prior priced exports. Now, sale doesn't export much. So clearly that kind of erosion we won't see, that delta. And therefore, sale is expected to perform better in terms of realization in this quarter, and add to it the fact that they are actually most dependent on external coking coal. So any decline in coking coal would affect them favorably. Coming to the negative side of it, well, again, if you look at Tata Steel, I think Street has already factored in the number. So we are expecting around $150 per ton negative EBITDA, mainly because price and cost have offset each other. However, there would be relining expenses at Iodine that would be expensed out, and that would be around $50 per ton. So that is the delta between this quarter and the last one. However, this has to be considered not exactly in a negative way, because the relining is important for the life of the furnace, and the advantages would accrue in the quarters or the years to go by.
So this $150, for Tata Steel, you're factoring in $150 negative EBITDA in the European business. That's actually worse than what the Street is estimating. So on the stock price, I wanted your thoughts, because, the stock has done nothing for investors if you map a 1 year or even a 2 year journey, right? It's been hanging in that 100, 120 range. Is there anything in these earnings that can take it out of that range?
No, so nothing is there in the earnings, to be honest. The earnings would be very lukewarm, let me put it this way, because whatever in India operations they will make, India operations EBITDA definitely would be better compared to last quarter. But having said that, Europe, as I mentioned, would be down. So therefore, overall EBITDA, in fact, would be lower compared to last quarter. So this is not a stock that one should actually concentrate on for this quarter or something. I think the benefits will flow in once the UK operations is streamlined, as they have guided the restructuring of UK operations. So it's a story that one has to look with a little bit of long-term perspective.
What about GMDC and Hindustan Copper? GMDC, in the past you have tracked it. I don't know whether you have official coverage out there. But do you think that some of these stocks have run ahead of themselves? What would your view be, particularly on both these two government-owned names?
No, so Nigel, I don't cover GMDC and Hindustan Copper. formally here. Having said that, in case of GMDC, well, the recent run-up in stock price can be attributed to the fact that government is contemplating lowering the royalty rate for rare earth. I think they have phenomenal reserves of rare earth which is being explored currently. So I think it has to do with that. As far as Hindustan Copper is concerned, again, no official coverage on the name, but I believe the stock will go along with the copper prices. People are factoring in that global copper prices might be in for an uptick because of the supply issues, particularly in Latin America. So I think that should be the driver for the stock. But having said that, we don't have an official coverage on these stocks, so can't really comment on these.
Amit, just one word, on GMDC, you don't have official coverage, but this rare earth opportunity is very, very big. What is the nearest possible guesstimate that you can give us that they actually start mining this rare earth, production starts out there? Because it's still a few years away, right?
Yeah, you're right. That's still a few years away. The proof of pudding is in eating. So we still have a long way to go before we can mine the first kg or ton, whatever you call it. So can't really put a guesstimate over here because there would be exploration costs. There would be various costs that would be associated with it.
Okay, all right, Amit, thanks so much for joining in. So the big factor in the last quarter is going to be coking coal costs cooling down by $50 to $60 per ton. SAIL could report a rather good set, on a relatively lower base. And for Tata Steel, revival of the UK operations will give direction to the stock.